little nervous. I just put it up there. So a little setup. So I want you to imagine a tiny island in the middle of the Pacific Ocean and thousands of miles from the nearest continent. And this is the Eastern Island. It's off of the coast, well, not the coast, but somewhere close to Chile. And for generations, the people who lived there carved enormous stone figures, and they were called moas. I don't know if you've ever seen any pictures, but these figurines, these huge big head figures buried in the ground. And for nearly 1,000 years, it was known today as Easter Island, and they carved the stones called, and some weigh tens of tons. So that's huge. And according to the classic Easter Island story, that the islanders cut down the palm trees and used the timber to move these huge stone heads from the quarry to the religious sites, the sacred sites, and across the island. And they kept building. And generation after generation, more statues were carved. Some became larger and more ambitious. Meanwhile, the forest was disappearing because they were cutting down the trees to move the stone. And eventually, according to the traditional story, virtually all the palm trees were gone. And which leaves us with a haunting question. What was the last person who cut down the tree, the last tree, thinking? So it is argued that this question missed the deeper problem. The tragedy wasn't that they ran out of trees. It was that they ran out of solutions. And this is described as a danger of static society. Static society becomes very good at preserving its existing traditions and ways of doing things. But when circumstances change, the instinct is to protect the old system. And so they kept carving the moths. And a dynamic society is different. It assumes that the problems are inevitable. So instead of trying to preserve everything exactly as it is, it preserves the ability to question assumptions, to correct errors, and to create new solutions, which kind of brings us to our finances. Because financially, we all have trees, and we all have know-how. Our income, savings, investments, and productive assets are our trees. And our cars, our home, our way of life, lifestyle, our business overhead, and recurring commitments are our mobiles. Now, none of this is necessarily met. The danger comes when the circumstances change, but we don't. So imagine someone earning $200,000 a year, and gradually builds up a $200,000 lifestyle. the business slows, a major client leaves, an investment fails, income drops, suddenly there are fewer trees. And a static financial system responds by preserving the old lifestyle, using credit cards, borrowing more, spending the savings, and waiting for things to return to normal. In other words, we keep building. So I'm going to leave you with that, and leave you with that thought. And Hector will give you the rest of the story. You're interested. Okay. So thank you.
All right. Can you hear me okay, or do I need to use the mic? You can hear okay? All right. Thank you again for being here. Like it's been expressed, my name is Hector Garcia. I've been in practice. I've been a licensed CPA for 47 years. Been in practice in San Antonio. The change of what we're talking about is change. How did, what's occurring now, and what do you want to do going forward, right? Because from the time I graduated in college back in '77 to now, there's always been a change of how we do business. Okay, always, and there's always going to be a change. There's always consistent change. But some of the tax regulations have been the same since 1986. Okay, so we'll go into that in a minute. There is a book that I'm going to recommend that you might want to get. Okay, that will explain a few things of what I'm going to be talking about. Okay, it's called 10x, 10, the number 10x is easier than 2x. Okay. The author is Dan Sullivan. Okay. What it talks about is that we need to think about having to change our business model. The way we do business now, it's not going to be the same how we do business going forward. Okay? Because the 2x entrepreneur, where we're at, whether you're selling investments, insurance, woodwork, record keeping, whatever we do, we know we're doing what we're doing because it worked. Right? And one of the first things that I do when I have a new client is, where do you want to be in 5 years? Where do you want to be in 10 years? What do you want to be when you grow up? Is what I ask. Right? And they tell me, well, I want to have this. I want to have, okay, well, put it on the board. And then let's work backwards, see how we're going to get there. Create yourself a roadmap, is what I'm saying. Okay. In creating that roadmap, it doesn't have to be embedded in concrete. It's going to be organic. What does it mean? It's going to expand, it's going to contract. Your plans are going to, you say you want to do woodwork, and I want to sell to the school district, for example, but it doesn't work, then you need to change in the middle of your journey. Okay? That's what I mean about being organic. Your plans need to expand and needs to contract. Okay? But on this book, the theory is that if you want to do things 10 times as big as you're doing now, you need to get out of your comfort zone. You need to get out of your 80% of what you feel comfortable in. If you're comfortable just doing $5,000 a month, that's great. But if you want to do $100,000 a month, what do you need to do to get there and set yourself a standard to get there? That's the change. Okay. Meaning, who's going to do the other 80%? Well, it's the who, not the how, that we're going to talk about. Meaning, I don't want to be doing bookkeeping, so I've hired Maria Rivera to do my bookkeeping for my clients. Right? Because I'm gonna concentrate on supporting you at a higher level for business plans, for financial forecasts, for tax representation, tax planning. Okay? Because for me, that's more valuable to be able to provide my experience to you, right? That's what I mean about being a 10X. I'm gonna set that bar. Okay? And that's what I want you all to think about. What is your bar in doing business? Which clientele are you gonna target? You want to target clients who just make $1 million, who can invest $1 million a year? That's your bar. Okay. That's the 10X. And how you get there is what we're gonna talk about. Just a few things, you know, as far as what kind of structure do I wanna be? Okay. For you who are here, who are independent, you're probably a sole proprietor. Right? What does it mean? You are your own business. There's two levels of agencies they will report to, the state and the federal government. Okay. Let's see if I get this right.
Val, was there a battery in it? That one Mary was talking.
I see the battery right there.
I was like,
To your left hand.
I
on the
put it
very
together,
bottom.
but I didn't see the battery.
No wonder it didn't
It's
work.
broken. I didn't want to bother Mary. I'm like, I know something's missing here.
So anyway, we're going to business, set up shop, right? Set up our own house, our own office at home.
Alright, sorry.
Thank you.
Is it? On right, I checked the plus and the minus
Plus and the minus.
on the battery. Oh, there, sorry.
No, that's
That's the volume.
Yeah, it's working.
okay.
Got a lot of technology. You want me to connect it?
Please.
Want me to fix it?
All right, when you're in business for yourself, you open up shop, you open up a bank account. Maybe you have employees, maybe you don't. Okay, yeah, go ahead. Oh, this is what we talked about. Well, the next one,
There you go. Now it works.
It's fixed.
which one?
Good.
Bottom? Okay, so you're a sole proprietor, and they say, okay, well, I'm gonna be an LLC, because that's the most common type of entity people now create. LLCs have been around since 1992. The tax rate, you know, all 50 states have their own regulations, okay? It's a state entity, it's a state form of being. So you create an LLC, okay, why do you become an LLC? My first question. So I don't know, I was told that to be an LLC. Okay. A limited liability company is really what it stands for. An LLC is gonna provide you an insulation for protection of contingent liability, meaning you do work, something goes wrong, the public gets hurt, the LLC is gonna protect your personal assets. That's really all it's gonna do. It's another form of insurance. Okay? So it's a state entity. But for the IRS, it looks at it as another taxpayer, even though you're the only member. Okay? Because the IRS didn't want to create another set of tax regulations like C Corp, Chapter C, Subchapter S as small business corporations, partnerships as a totally different code section. Okay. Back then in IRS till now, they don't want to create another set of regulations. So what they did is they decided LLCs, you have a choice. In the state of Texas, it's a community property state. You and your wife are members. You're a single member LLC. 50% of what you own, she owns. 50% of what she owns, you own. So the federal government looks, and the community property states looks upon you as a one-member LLC. Okay. If you and you go into an LLC, two different members, now you become a partnership by default for federal reporting purposes. Okay. Why do I have a comparison for LLCs compared to what I suggest people consider? It's a small business corporation. Is because LLCs, sole proprietors are subject to federal income tax, Medicare tax, and Social Security tax. Okay? 3 different forms of taxation, depending on your source of income. The lowest tax bracket federal is gonna be 10%, goes 10, 15, 18, 22, 26, 28, 30, 39. It escalates. It's an individual, depending on your source of income, the amount of income. The profits from your business are gonna be subject to Social Security and Medicare tax. A separate tax. We call it self-employment tax. Okay? At a rate of 15.45%. That's on top of the federal tax. If you work and you're an employee, you pay federal income tax and Social Security tax. Okay? And Medicare tax. The employer pays 50% of the Social Security and Medicare tax. But you as a self-employed individual, you get stuck with both. So depending on the level of income, who's involved in the entity, your growth, we'll look at to see when an LLC gets converted to an S corp to save taxation. Okay. But as a sole proprietor, you don't have as much tax benefits compared to an S corp. And we'll go into that here in a minute. Okay. Like it says here, sole proprietor, very simple. File articles of formation with the Secretary of State, $325 fee. You're up and going. You get an EIN, you get up and going with as a sole proprietor. Okay. The administration cost is minimal. Everything else pretty much the same. Okay. Except as an S corp, if you're the only member inside an LLC and you become an S corp, you're gonna be looked upon as being an employee. You're gonna have compensation as an officer. You're gonna have compensation as a director. And you're gonna have dividends as a stockholder. 4 different ways you can pull money out of a business. Okay. Employee, officer, director, stockholder. There's different compensation packages that can be looked upon for you to create benefits for yourself as an S corp. Okay. And this has been going on since 1972. Okay. So this is why it's important that you know the difference. You're out there as an individual, proprietor, entrepreneur. What can you do to create tax deductions to create benefits? That's always my question. Okay. People always come to me and say, well, I don't want to pay any taxes. My response is, then I don't make any money. Very simple. Just yesterday, I had a nice meeting with a CPA from Mexico who came to learn how is it that I do what I do with Mary and I only, when his firm has 58 licensed CPA firms in Mexico. Okay. He told me of the war stories of those multimillionaires who create deductions at the risk of being caught. Okay. He said, and he tells me, I don't want to deal with those kind of clients because the mafia's gonna come in. They get kidnapped, right? People with lots of money, they're subject to kidnapping. They get hurt. Okay. So, over here, there are legitimate ways you can you have a tax deduction to create benefits for yourself, legally. here in a minute. Here again, it's just going over the setup costs, you know, let's compare one with the other. We'll be happy to share this with you later. When does it make sense to change from a sole proprietor LLC to an S corp? You look at your profit. If the profits are going up, how much taxation do you have as a sole proprietor compared to an S corp? The profits of an S corp, let me just say this, forgot to say this before. Whatever profits you have inside an S corp is gonna flow to you on your form 1040. The S corp doesn't have tax, income tax, doesn't pay tax. The profits pass through you. It's called a flow-through entity. Okay. After you pull your deductions, your benefits out of that, whatever's remaining is subject to be taxed at your personal level. Okay. And if you have profits in that from previous years, you can pull that money called a dividend, and it's gonna be a tax-free dividend. Okay? This is why I like S corps. There's different ways you can carve the profits for your benefit. Okay? So many different ways. Again, liability exposure. The mistake that people make when they're in an S corp is that they forget that they're employees, officers, directors, and stockholders. They forget that they don't forget, they just don't wanna have a payroll, because they don't wanna pay payroll taxes. So let's say that we're gonna have dividends. Well, the IRS is always looking at how much salary does an officer pay themselves compared to how much they withdrew as a dividend. Okay, that's a red flag. So we look at always payroll. How much payroll, what is ordinary and for an officer? What is ordinary for that same person as an employee? Okay. Because they compare with today's computers and AI, they're always gonna be comparing with other S corps in your industry, always. Okay. Mistakes that LLC or sole proprietors make all the time, and I always look at this, you know, they wanna put as much as they can in terms of deductions into a business to reduce their taxable income. Be careful when that mixing personal and business funds. I always advise people to have a business bank account. Personal separate from your business, always, always, always. Okay. You have no idea how many people represent an examination, they combine the two, so what do? You open up a can of worms for the IRS, say, okay, well, let me see the rest of the bank statements. And they'll start questioning your personal expenses. Okay? But if you have a separate business bank account, okay, they can't ask for your personal information. Okay? So be careful not to mix personal with business, all right? Always have payroll on as far as an S corp is concerned. The biggest thing in a lot of, whether they're LLCs, sole proprietors, or corporate, is the protocol. If you're gonna be an LLC, you're gonna have to have a protocol called minutes of your meetings, who are the members, what did you do, have an operating agreement, have everything documented, so if you get examined, if you follow your agreements, you're okay. Okay? But the protocol is where it gets a lot of people in trouble. If you're an S corp, they're gonna ask for your minutes of your stockholder meetings. Okay? So it's important that you document what your plan is, what your agreements are. If you and your wife are in business for yourself, you're still gonna be required to have a company agreement that says both of you are members and you're gonna be allowed to do A, B, C, and D. You're gonna be compensated for this. They're gonna reimburse you for X, Y, and Z. Inside an S corp, you can have a medical reimbursement plan. They'll be tax deductible. Okay? You can have an HSA, health savings account, that'll be tax deductible for your benefits. That's what I mean. That's what I'm saying. It's a S corp. You have so many deductions that are legitimate. Because I know this gentleman asked me, tell me all the tax deductions, right? There are so many as an S corp. Okay, you just need to know what they are and when you want to pull that trigger. Okay, for your benefit. Okay. So choosing the right structure. Okay, what business model you want to do. I know that I can't do everything that I used to be able to do. Okay. So right now I'm just changing my whole business model. And I expressed this to Miguel and Marisa. Okay. I no longer do what I used to do. So now it's sending my bar a little bit higher, who I'm gonna be serving. That's my standard. Need to have courage to be able to maintain that. You know, one of the standards that we've had at the office for the longest time is we maintain a list of clients who we call PIA accounts, pain in the ass accounts. Okay. And some of our clients know that we maintain this list, because that list is what we use at the end of the year to fire 10 to 15% of our clients. By firing those clients, we create space to have 2 or 3 other clients who want to do business with us. That's a standard. Right? So how many PIA accounts do you want to have? Right? Sometimes we say, well, I need that client, even though they burned our midnight oil. Yeah. It ain't worth it. I guarantee you, as we get older, it's not worth it. I want to sleep at night. Okay? Another standard is, people try to call me on my personal cell phone and I won't answer. Right? Because it's my personal cell phone. I have an office cell phone. Okay? Or they'll call me on weekends, or they'll send me emails on weekends. I don't respond till Monday. Well, that's my standard. Saturdays, family time. Sundays, God's time of worship, right? But that's our standard, and we live up to that. And we feel good about it when we go to bed at night. Come up, okay? So that's what I'm asking you. Set up your goals, and don't just think about them. Put them on the dart, and put them on the board, and throw a dart what they are. You have a meeting with me, because I'm going to ask you, what do you want to be in 5 years or in 10 years? Okay. What do you want to do? What do you want to be when you grow up? One of the things we forgot to mention, there's a QR code that we're asking people to check in, because at the end of this conference, we're going to give a prize, even for Miguel and Marisa who are here, anybody. Okay? I won't tell you what that prize is, but there will be a benefit after this. Questions? Anything? I don't want to put you to sleep. If so, there's some more coffee. Anything? I can see your eyes rolling. So. Any thoughts? Yes. Go ahead.
I'm okay. Over there, Echo.
Keenan, go ahead.
So I guess if you already have a business that's set up and has been set up, can you go through like a restructuring process to clean things up, especially if they've not been handled well for a little while?
Mm-hmm.
What does that look like? Especially like now that I have a wife and a baby, like what does that look like in business?
You restructure, you clean up your act. Meaning you're gonna record whatever hasn't been recorded, okay, going forth. If your books and records need to be cleaned up, you'll clean them up. If you already filed a tax return, you can always amend it if you have some more deductions. You can go back 3 years after you file your return to amend the return, okay? People don't wanna do that because I'm gonna get audited. Ever since this administration has taken office, 65% of the Internal Revenue Service personnel have been laid off. They don't have the personnel to come after us or even look at us. They're being replaced by computers with AI. The sad thing is the computers with AI have not been reconciled with tax policies. Okay. People are sending their tax payments and they're not being matched with the tax returns. Okay. Tax returns been filed, they get lost. So taxpayers, there's what, 8 different service centers in the country. So one service center is responsible sending you notices that your return hasn't been locked in, hasn't been processed. Well, another return has your tax return. Another center has your tax return that hasn't been processed. The two are not communicating. So I stay busy responding to these letters. Okay. So people say, oh, I'm gonna get audited. Yeah, good luck. It ain't gonna be in my time. I'll tell you that right now. And the IRS auditors that are coming on board, they're so green, they're so inexperienced that we need to be teaching them what the code is. Seriously. Seriously. Procedures. Say, oh, we're gonna do this, you can't. So why not? Because code regulation requires that the taxpayer has this right. Yeah. Oh, let me go back and look at it. Yes, go back and look at it. That's who we're dealing with right now. So to your question, if things have been messed up in the past, clean it up. Okay. But do restructure to go forward because that's part of the change. Because that's restructuring, you're gonna set your bar. Okay. Now there's 3 of you instead of just 1 of you. Okay. How do you utilize the entity that you can create for the benefit of your little one? Okay. I mean, there's so many opportunities there. Okay. Anybody else? That was a good question. Anybody else?
What advice, Hector, do you have for new agents that are just starting their own business? Let's say in our field, for example.
Get their licensing with the insurance, get them started, okay? Once they're up and running, I would say 6 to 12 months afterwards, consider formalizing their form of doing business. It's an LLC in order to protect their personal assets away from the contingent liabilities. Okay. You want them to get on the ground, you want them to get started, you want them to be successful. Then take the next step. Okay. Because I have so many clients who go into business and I already set up an LLC, but you haven't opened up your doors first. You already incurred some administration costs. Administration costs that requires reporting to the state. Administration costs you need to report to the IRS for something you don't even have yet. Right? So what comes first? The chicken or the egg? Right? No, start the business first. Okay, get it off the ground. Then next step, okay, what do I do from here? Now that you've got all the tools in place, you got your database, you need to be, whatever that is to get business started, get it started first. Before you take the next step of forming more sophisticated tax entities, what I call it. An LLC is a little sophisticated. What makes it sophisticated? Creates an umbrella for insurance purposes to protect you. That's the sophistication.
Here's an answer from my
There's your AI.
When Javi was around, there was one time we were talking in the kitchen and I said something not nice. And it responds, oh, you're rude. Okay,
Keenan, that's another question.
Hector,
yes.
does it ever make sense to close a business and restart as like start fresh?
You want to do that if you don't want that history behind you to go into your what you're going into. Right? I mean, how bad is the previous business that you don't want that history to go into with you?
I guess it's more of like dealing with like lawsuits and stuff like that.
Okay? All right? Yeah, it really would require a deeper dive in whether you set up a new business. I would ask why, because for me, the history really has a lot of credibility. For me to tell a mortgage company or a bank that I've been in business for so long, but the first 5 years as a sole proprietor, the next years is a different form, but I'm still doing the same thing. That's the credibility that I'm talking about. That's part of your history that goes in with you. Okay. Oh, you're in LLC for 2 years, but you've been doing this for 10. That has credibility, that has value. Especially to bankers right now. Okay, and mortgage companies. Because they don't wanna know that you only been around for 2 years in the LLC. Well, how else are you gonna make your money? Oh, well, I've been doing this for 10 years. Oh, okay, now that's a different picture. Okay, you make my point there, you understand? So we have to look at a deeper dive. Which is something I get all the time. All right. I think this is where this gentleman wants to know, so don't go to sleep. All right. What are deductible businesses? Deductions. The IRS code section says on code section 162, and I'm not gonna tell you the rest. Just know that code section 162 defines a business deduction. Any expenditure that's ordinary and necessary to generate your income, that's a legitimate tax deduction. Ordinary and necessary. Okay? I mean, the code section is about 50 pages long. Okay? But in a nutshell, that's what it is. So what does that really mean for you? You use your cell phone for your business? Do you make money using the cell phone? Yes, the cell phone expense is deductible. You need a new computer? It helps you generate your revenue? Yes, it's a tax deduction. You travel? Yes. You travel out of town and you spend a night away from home? That is deductible. You travel away from home and have meals, the meals are tax deductible. Okay? But only 50%. You travel away from home and stay at a hotel overnight, and you charge your meals to the hotel, and at the end you pay the hotel bill, that meal becomes 100% deductible. Okay? Why? Because the revenue agent's not gonna separate the meals from the lodging. You're only paying the hotel bill at the end when you're checking out. You travel away from home overnight. Do you take the actual gas or do you use the standard mileage? I would use the standard mileage. Why? Because the IRS is allowing you 70 cents a mile to be deducted.
76 cents
Corrected by my daughter.
as of July 1.
Okay. So you need to look at what's ordinary and necessary. Well, I office from home, okay? But I also have an office. I'm renting my office, which is the main place that you receive clients. We see clients. We have our own office, but we office quite a bit from home. I'm not gonna take deductions off my home because office at Lincoln Center building is our main office. That's my main primary place of business. But you're office from home and you have footage of your home that you use for business is your office at home, subject to office at home deductions. Square footage of the area, okay, divided by the square footage of your entire home. That's the business percentage of your office at home that will be applied to your rent or your interest on your home mortgage and insurance on your home,
Property tax,
HOA, property taxes, repairs,
utilities.
utilities. Okay. Those are ordinary and necessary. Yes, sir.
I have a quick question, maybe a dumb question, right?
No question is dumb.
I don't have exactly per se a business, right? I'm just kind of getting started with Miguel and his wife over here. I know you're saying it takes like 6 months to 12 months to kind of develop a fundamental to the business, right?
Right.
So for the first year, roughly, just kind of absorb all those tax hits, I guess?
Yeah.
Okay.
Why do I say that? Because you're gonna have a lot more expenses that'd be subject to deduction
Right.
on your personal tax return.
Okay.
Okay.
That makes sense.
Believe me, you will.
So just be kind of different, more personal taxes versus a business tax at that time. Okay, understood.
Right.
Keep all my receipts.
Right.
Right, cause that goes on its own separate, like, Schedule C,
Mhm.
and that's where you're able to
See,
take all
you
the
can teach a course
percentages.
myself. And she doesn't wanna become a CPA.
So like this gentleman, he's woodworking, and if he has it in his garage and that's his workshop in the garage, then he can take that percentage
Right.
of the home, expenses.
Right, like you're
Until
saying.
he's able to build it up,
To
maybe
something.
over that year, and then he can go get a brick and mortar.
Right, right,
You haven't even sat for the exam yet.
right.
So if you like use your, like if you office at home, but you use your kitchen as like a break space and your bathroom, do you add all that
Areas
square
that you use for business.
So you can almost legitimately say 50% of your home is your office space.
You put that out there and you keep what's called a contemporaneous record. You leave it up to the IRS to prove you wrong. You put the burden of proof on them. Okay? Because you say, I'm using the kitchen, I'm using the living room to interview clients, I'm using my office, okay, all that square footage. They're not gonna park an agent there to see that's exactly what you're doing. For the amount of years I've been doing this, I have yet to see an agent even go to anybody's house. Why? Because I won't let them. An examination, I never have my clients with me. I only answer what needs, whatever inquiries asked. Okay. But if that's what you're using, that's what you're gonna put on as business square footage. And like Marcelo was telling this gentleman, if you use the garage or a different area for, and then you're using the another office at home for it, all that's business area. Okay. I have clients that say, well, I use my garage for storage. I'm not gonna go over and see that you really have storage. You know, okay, that's your word. That's what you put on my organizer. That's what you put on paper. That's what I'm gonna use. I'm not gonna audit that area. It's not my job. My job is to keep you compliant. Okay. With the amount of debt this country has now, and the workforce that the IRS has, right? The areas of abuse continues to go up in terms of taxation. The IRS makes quite a bit of money collecting taxes, but they make twice as much on civil penalties.
Wow.
Okay. Why? Because people don't know how to respond to civil penalty letters. Oh, you owe us this much. Oh, it's the IRS. Okay, what's the running joke for us at the office? Oh, I received a letter from the IRS, right? Have you opened the envelope yet? No, because it's the IRS. Okay. But civil penalties is they collect twice as much. Failure to file, failure to pay on time, failure to pay quarterly. I mean, there's so many penalties. Okay. But there's so many regulations that can abate those penalties. So, you tell me, yes ma'am?
The question, so, let's say we haven't set up our business yet, but he's already started buying tools for the business. Are we able to start the business and still claim?
Yes ma'am.
Okay.
They're ordinary and necessary
All right.
for him to have his, to make his
Okay.
money.
So we don't have to set the business first and then start buying, like, we do, okay. All right, I wasn't sure if there was a process.
Just keep your receipts so you can prove them. Those are mine. No matter when you bought them.
And register them for warranty.
Right. So, ordinary, necessary, business home, what we talked about. The third item is really one of the things that I want to expand on, and we'll do here in a minute. It's called using your business to create benefits. That's what we talked about earlier. Retirement, protection of your assets. They're traditional compensation plans, qualified, non-qualified, they're non-traditional. And we'll go over that here in a minute. And that's where these folks come in. Well, y'all gonna learn that. Documentation. You know, with today's technology, my advice also would be to get a good scanner. Scan your receipts, get a cloud service so you can upload to Google, OneDrive, save, scan documents. Okay. You know, for me, I do things very redundantly. I have, I don't know how many computers, I've got 2 or 3 computers. Because if one breaks, I have another one. You know, I believe in plan A, plan B, plan C. Okay? So I've got 1 computer at the office, I've got 2 at the house. We've got a cloud service that we save all our client information. Then we have Google Drive, OneDrive, okay? You know, redundancy really, for me, it's a necessary thing. Just don't depend on one. We got scanners at home, scanners at the business. Clients tell me, you know, I don't have a scanner and I don't wanna buy one, then you can't be my client. No, simple as that, that's my bar. I wanna go in and see you, well, you can't, we're gonna do a virtual meeting. Well, I don't wanna do that, then you can't be my client. Right,
It's all on the phone.
of course. Right, technology. You know, I told Miguel, I heard an economist say, is AI gonna take over your job? And the response is no. The person that learns how to work with AI, that person's gonna take over your job. So what have I been doing all these past 2 weeks? Learning about AI. And I'll be using AI next tax season to gather this information, because there's 2 types of, I learned there's 2 types of AIs. There's called a generic AI, which is what ChatGPT does. And there's agenetic. Agenetic is a type of AI that's gonna do the work for you. There are applications that will create work for you. And those, if you know about those 2, yeah, I'll be, you know, Marcela told me about the auditor who's retiring, and I said, yay, he's retiring, 1 less CPA in the business. Does that leave more room for me? Or for us? Right? And the other sad thing is that the college students that are coming out of grad school or a master's, they're not sitting for the exam. So there's less coming into the profession and more of my colleagues retiring. That gives me, just this week I had a phone call from an attorney from Georgia. He said, I'm trying to hire somebody but doesn't know English. And we look for the CPAs who speak Spanish. You're the very first top on the list. can you help me just enroll this person on payroll? I said, sure, $250, okay, here it is. Okay. Because we have value in what we do. You create your niche of your work or your craft, you create your niche, and you become valuable. Okay. We talked about it already. Ordinary, necessary, common category, we already talked about that. What's ordinary, necessary? Okay. Just watch the line in your personal versus business. Home office deduction, it's really gonna be $5 per square foot, the maximum of 1,500 per year. If that is greater than your actual, we use the 1,500. But if your actual is greater than that, I'll use the larger. Okay. Based on your business percentage at home. Vehicle, I said, standard versus actual, I'm gonna use the mileage. Okay. Why? Because it gives you a higher deduction. People get audited. They ask to prove the business miles. Client says, I didn't keep a log. I said, go to your phone, get a hold of a calendar, start populating where you went, where you came, so forth on your calendar. That's considered a contemporaneous record. Okay? If you have that record and you turn it over, it's up to the IRS to prove that it's not true. You put the burden of proof on them. And that's the regulation. Something is better than nothing. You tell the client, I don't have anything, boom, you're lost. You're already behind the 8 ball. So client, an auditor asked me, let me have this. I said, okay, give me time let me ask the taxpayer to get it. It'll take me a month to get it. I said, do you have it? No, let me have another month. They can't do anything. Meantime, I'm gonna be poking my clients, okay, where's that calendar? Where's that record? Because that's the contemporaneous record. Okay. Again, mileage rate is way greater than the actual. Here's where we talked about.
Taxes make her nervous too.
Pardon?
I said taxes make her nervous too.
One of the things that one of the things that's fun for me is educating our clients or making them aware of what's doable and what's not doable. Okay, and the biggest area that a lot of folks miss the boat every year is saving for themselves. Okay, if you've been in the workforce, or you're just out there looking for a tax deduction, you say, well, put money in an IRA, put money in a SEP IRA, put money in a Roth, okay? Those are what I call traditional deferred compensation, deferred retirement accounts, okay? But there are non-traditional plans. I call them traditional because banks don't offer them. The IRS is not gonna promote them. Okay? Because they're safe. And you make more money inside these investments than the others. The ones that are traditional. Okay? I'm not gonna go into details about all these, because that's why we have Maritza, Miguel, and Mary, and the others who are in it. Okay? They can tell you how it all works. For me, it's an opportunity for you to make a tax deduction out of these non-traditional, okay? Qualified, non-qualified annuity, permanent life. If you're an S corp, you can create a buy-sell agreement. You can have key man insurance, okay? Have investments underneath, okay? Let it grow for yourself, and it's a tax deduction, okay? You have term life, also strap it the only person that makes that work. You're the key man for that business.
Oh, there's insurance for that?
Yes, sir. That's why you're here. Right? There's so many mom and pop, I call them mom and pops. There's so many businesses out there owned by family that the papa is the main breadwinner, the main primary. We put a buy-sell agreement or key man insurance in there. The year he passes away, proceeds go to the family, tax-free, business continues, or they sell it. What's the tax-free benefit? Tax deductible by the business. This is what I'm saying. These are legitimate tax deductions for your benefit. This is what you need to educate your clients or make them aware. Okay? Because a lot of us growing up here, we work for a company, they have a retirement plan 401k. Your school district, 403b, okay, which is almost the same. Who controls the money? Okay. Your broker. Well, you have these plans, you control them with the help of the agents here. Okay. A lot of folks are saying, well, there's a new animal called the Trump account. Right? Can we get $1,000 from the IRS, from the US Treasury, for a baby born from the time President Trump was sworn in to the time he leaves office. Those 4 years is when a baby qualifies to get $1,000. Great. You have to fill out about 5 different forms to get it, but you get $1,000. You can put money into it. You put money after tax dollars into it. Let it grow. You have no control over the accounts because the brokers is going to be the U.S. government. Okay? So you have no control whether it's performing or not performing. You're stuck. You put money into it. Money's not available till the child reaches 18 years of age. Okay? What good is that? Might as well open up a Roth if you're going to do something like that. Better yet, go to the non-traditional plans that are available for your child. Because investment into a child into these non-traditional, by the time they reach 18, they can borrow to go to college, and they don't have to pay it back during their lifetime. I mean, there's so many benefits, is what I'm saying. Okay. And for those of us who are older folks, we have kids or grandkids, think about them. Okay. Because that's going to be available for them. And you control where that money goes into and how it performs. You get to see it with the help of these folks. If it's not performing, it's moving somewhere else, you get to call that shop instead of a government broker telling you, you can't do this. Trump account is not tax deductible. That's why it's not up here. Okay. So how much cash is available out of the business? This is where you need to stay on top of looking at learning how to read your financial statements. There's a balance sheet, income statement, cash flow statement. Out of the three, for me, the most important one is the cash flow statement. I need to see where money's coming in and where money's is being spent, how much is left over out of that, how much is left over, how much do I want to put aside to protect my assets, to save for the future. Create some kind of funding for your kids and grandkids. All right. Questions? HSA. I have people who put in $8,000, $9,000, $10,000 a year. The limit is only $8,750. Okay. So, well, what happened to the difference? They use it. They can't deduct it. Okay. Learn the rules. I always say, learn the rules of engagement. Okay. For those who already put in 10,000 last year and they can only deduct 8,750. So can we pull it out? Sure, you can pull it out, but it's not. You pull it to a taxable event. Okay. So yeah, any questions? a separate record-keeping system for your business and for your personal banking account. Yeah, we have money under us who helps our clients with bookkeeping, so if you need bookkeeping service, she's right here, okay? Okay, we talked about this before. Again, what's ordinary and common for an S corp? You know, we looked at that. Common mistakes is, I always get this. You know, I make so much money, okay, where's your 1099s? 1099s, we add them up. They added up more than what they tell me, right? So, the IRS already knows how much money you all make. Because they get the 1099s. They get the 1099 from interest, 1099 NEC if you're earning commissions, you're gonna get a 1099 NEC, non-employee compensation. 1099 miscellaneous, okay. The IRS already has all this information. And if people don't file their tax returns, they're gonna file it for you. Okay, that's what people don't know. After 3 years, they don't see a return from you, they're gonna prepare a return for you. And they're not gonna be kind. They're gonna take the deductions that you deserve. And then you're gonna get charged the tax, the penalties for non-filing, penalties for non-payment, okay? And it becomes a cobweb trying to get all that cleared up. Because they already have information for you. Right? And when we file the return, it gets matched. So taxpayers will say, well, you earned $50,000 from a casino winnings. So how did they find out? Because the casino's gonna report W2G. Oh, I forgot to tell you that. Well, now it's gonna cost you. The penalty and for me to amend the return. Right? Everything has a cost. Monetarily and not monetarily. I always say that. Okay? Everything has a cost. Say, well, I'm gonna do all this myself. Okay. 2 o'clock in the morning, 3 o'clock, it's got a cost. It's costing you a relationship. It's costing you your health. Those are the non-monetary costs. This checklist, we've got some checklists here, right? Be sure you take some home on the checklist, because this is what I'm gonna ask you to just start thinking how to prepare. We're in August, right? You start planning for next year, absolutely. It's never too late to start planning. Okay. Because right now you have 4 months before the end of the year to pull the trigger on whatever you wanna do for tax deductions, generating new revenues, okay? Financial security beyond taxes. Okay, any questions on taxation? Did I go too fast? I probably did. Okay. Any, were you able to get some information? I didn't talk about anything illegal, I told you.
That's what I wanted to know.
Yes, yes, I wanna know both, you know? Okay. These folks, I need some of you guys marry the agents here. You know how to, what your servicing clients is protection. It's the way I like to say it. How do we create those protections that has a dollar figure called cost into a deduction? And compare that cost compared to the benefit. As accountants, that's what we do. Cost versus benefit. When the cost is greater than the benefit, it ain't worth going into. But when the benefit's greater than the cost, then it's worth going into. On whatever I do. Okay. But that's our discipline. But think of it that way. Bought the tools, it has a cost. What's gonna be the benefit? It's gonna be the future revenues. You're trying to decide, should I buy this type of saw? Okay, what's the cost and how much revenue can you generate from it? Always look at the cost versus the benefit. Okay. And then looking and protecting your assets, okay, what's available for you now, what's available for your kids, what's available available for your grandkids' future? Okay. What is the cost to that? And if you have a business, how do we make it deductible? I have clients who I have their children get to be placed on the payroll. So, but they're only 6, 7 years old. Put them on the payroll. Okay. Why? Well, you're gonna be paying for the college. You might as well start putting money into their savings account so they can grow when they have money when they go to college. The IRS is not gonna know their age. They're only gonna need their social security number. So now these kids are employees. Now those kids have insurance. Those kids have qualified and unqualified plans. They're all being tax deductible through a business. Okay. That's non-conventional, but people don't talk about it. Right. But we've been doing it for years. The gentleman I talked to yesterday, he was telling me about the key man person, the primary person who's in business. He's pretty high up, but his kids are not producing the way their dad is doing. So they create a different structure for the kids that only pay 2.5% in tax of what they do. And they're doing the same thing their dad is doing, but at a lower scale. Being creative in using the tax code is what's fun for me. Okay. So if you have children, yes ma'am.
Is there a certain amount that a business needs to make in revenue to be considered a business and take, like benefit from the tax breaks?
No ma'am. So long as it's not a hobby. There are hobby rules, right? Let's say I'm just gonna cook cookies, bake cookies, right? But I do it so I can give it to my family in Christmas, whatever. It's a hobby. People wanna take deductions on that. Is there a business motive? That's the key. Do you have a business motive behind those deductions? That's the key of having an operational business. Compared to a hobby, there's no business motive, there's no profit motive. You're just doing it to feel good. That's what you have to look at and consider. Profit or business motive. You know, I've had businesses who had losses for 3 straight years. But then we finally turned it around. Here's where the business plan comes in. You know, okay, for the first 2, 3 years, you're gonna have losses because you're putting in this investment, you're covering new markets, you're trying a new project, okay? You're following the plan. Well, not too many people have business plans. You get audited those 3 years, hey, this is the plan I'm following. Oh, okay, so there is a profit motive. Okay. That's the key. All right. Here, I talked about this before, the traditional versus the non-traditional. And Miguel and Mary can talk a lot more about this afterwards if you like. Okay, what's available. But all these are legitimate tax deductions, though, that's my point. Okay, they're all legitimate. Who was it? You were asking, key man insurance. Right? They're all life insurance, but inside a policy, you're gonna learn, or you already do, what you can do underneath that policy. The investment's called annuities, UILs. Okay. Again, this is something we just all talk about as agents, how to protect your investments, how to protect your children, okay? How to create wealth. I like to think of it creating different pockets of wealth, okay? Not just one bucket, but different little pockets. Annuity, insurance, okay? Other different plans, a medical reimbursement plan. Inside an S corp, you can have a medical reimbursement plan, which means you're the only stockholder, your wife is a member, you have medical costs, you can reimburse yourself through a third party and make it tax deductible. I mean, things like that. Have what's called an accountable plan. What is an accountable plan? You have a plan that says the corporation's gonna reimburse you for travel, mileage, other expenses out of your pocket. It's not taxable income to the employee or to yourself, but it becomes a tax deduction. Okay. There's so many different opportunities to create deductions for your benefit. Okay, so the security that we're talking about here, it's gonna be on cash reserves, it's gonna be on, look at your retirement plans, look at your insurance plan. This is where you wanna just take a picture of so you can see, where do I start? What do I start doing? Especially if you're fresh and brand new, starting your own business. You know, out of your business, you're gonna create reserves, put money aside so you can invest into yourself. Okay. Put money aside so you can create a tax deduction to invest in yourself. Okay. Then you look at the other plans that are available. Okay. If you're consistent with that, you set the bar, you set your standard of how you're gonna operate every year. Okay. And again, that's only meeting your goal. Next year, you're gonna elevate that goal. But this is the order you wanna take it into. You start a business, no matter what it is, how much money is gonna be left, and what are you gonna do with that leftover money? And that, no? Right. That was it. Any questions, comments? Is it too boring?
Thank you for coming here today.
What's that?
Thank you for coming here today.
Oh, great. This is what you need to tell your clients. Okay? This is the fun part. Again, make sure you take a picture of this, because the prize that I hadn't announced is that I'm gonna give away one tax service for next year. Whoever wins this lottery, you've got my time and my tax return, your tax return prepared by me at no charge. Okay? So, take as many pictures as you want of that. And give it to your clients. All right? But I appreciate y'all taking time yourself on a Saturday to come and listen. We can always do this. I always tell Miguel, I'm available to offer this service after April 15th. I'm always available. Right? Between December and April 15th, it's a different animal at the office. But it's fun. I wouldn't be doing it if it weren't fun. I used to have a lot of hair. My brother can tell you that. We're both. You can tell,